Dear students, welcome to the fourth session on the chapter Death of a Partner. Here in this session, I am going to take up the next question. Let me read the question now. Shahrukh, Amir and Salman are partners sharing profits and losses in the ratio of 3:2:1 respectively. Their capitals are as on 31st December 2011 stood as follows. Shahrukh 3 lakh, Amir 3,60,000, Salman 2 lakh. On 31st March 2012, Shahrukh died and his executor claimed the following. First point, allow interest on capital at the rate of 6% per annum. Second one, the firm has insured partners' life individually. Shahrukh for 40,000, Amir for 30,000, Salman for 24,000. The surrender values of these policies on the date of death amounted to half of the sum assured. Third point, Shahrukh's share of profit till the date of death is to be calculated on the basis of immediate previous year's profit. Fourth point, Shahrukh's share of goodwill is to be calculated on the basis of 2 years purchase of average profits of the last 3 years. The profits for the last 3 years were for 2011 60,000, 2010 80,000, 2009 1 lakh. Shahrukh's drawings till the date of death amounted to rupees 50,000. Immediately on the date of death, rupees 2 lakh is to be paid to Shahrukh's executor and the balance is retained in the firm. Prepare Shahrukh's executor's account. It is given that there were three partners, Shahrukh, Amir and Salman, and their profit sharing ratio was 3:2:1. Among the three partners, who has died now? Shahrukh has died. So he is the deceased partner. What is the profit that belongs to the deceased partner? 3/6. Okay, 3/6 is the profit that belongs to the deceased partner. Then the second thing we need to analyze here is that their capitals as on 31st December 2011 stood as follows. Nothing but this is the date on which the previous balance sheet is prepared. It is the closure of previous year, and as per that the capitals of three partners were 3 lakh, 3,60,000 and 2 lakh. We have to identify what is the capital that belongs to deceased partner Shahrukh. Okay, because when we prepare Shahrukh's capital account, so that amount appears as a opening balance, by balance brought down 3 lakh rupees. Okay, then after we analyze as on which date the previous balance sheet is prepared, we have to calculate or we have to find out when the current financial year begins. The current financial year begins on 1st January 2012 and it ends on 31st December 2012. And when Shahrukh has died 31st March 2012, which means that from the beginning of the financial year he was there as a partner only for 3 months, that is the month of January, February and March. March should be included because he died at the end of March. Only for 3 months he was there as a partner in the firm, so all the calculations are based on that. Here we need to prepare executor's account who claims the following. The first point given as allow interest on capital at the rate of 6% per annum. It is an item which should be credited to deceased partner's capital account. How do we calculate? Capital balance outstanding, that is 3 lakh into 6% for 3 months, 3 divided by 12. Okay. Then the second point is about individual policies. So calculations are similar to the point which we have discussed in the previous question also. Individual policies means they take up individual policies separately on the life of each partner. So here also it is given that the firm has insured partners' lives individually. Shahrukh for 40,000, Amir for 30,000 and Salman for 24,000. So these amounts are the sum assured or the maturity value of the policies. Okay. So now among the three policies, which policy has matured? Shahrukh's policy has matured now. They will get entire 40,000 because he has died. The condition for maturity of the insurance policy in case of individual policies is either the death of the concerned partner or the maturity period, whichever is earlier. Here the partner has died, first policy matures. Coming to the other two policies, that is policies of Amir and Salman. So these are the maturity values or sum assured, but as on the date of Shahrukh's death, they are not going to get that amount because those policies have not been matured. So we need to calculate what is the surrender values of those policies. It is given that the surrender values of these policies on the date of death amounted to half of the sum assured. Only 50% they would get if they surrender the policy to the insurance company. So we need to calculate what is the surrender value. Then we will be giving what is Shahrukh's share to the executor. Okay. Then the next one, Shahrukh's share of profit till the date of death is to be calculated on the basis of immediate previous year's profit. This point speaks about giving share of profit in the expected profit during the current financial year for the months for which he was there as a partner, that is for January, February and March. So this expected profit for 3 months we need to calculate on the basis of immediate previous year. He died in the year 2012, which is the immediate previous year 2011. In the next point they have given what is the profit for the year 2011. So 2011 they had profit of 60,000, which is a profit for 12 months. For 60,000, for 12 months 60,000 is the profit. For 3 months how much? So we are doing the cross multiplication to calculate what is the expected profit of the entire firm for 3 months. Thereafter we are going to calculate what is Shahrukh's share by multiplying 3 by 6. Okay. The next one, Shahrukh's share of goodwill is to be calculated on the basis of 2 years purchase of the average profits of the last 3 years. The profit for the last 3 years they have given. So here the value of goodwill, we use the formula average profit into number of years of purchase. They have given the profit for 3 years. We have to add those profits divided by 3. We get the average profit multiplied by number of years of purchase. Here it is given as 2 years. We will get what is the total goodwill of the entire firm. Then we have to calculate what is Shahrukh's share, that is deceased partner share, which comes to 3 by 6. Okay, 3 by 6 into value of goodwill of the entire firm. We will get some amount. That is the amount which the remaining partners have to give to the deceased partner. So the entry, the adjustment entry would be remaining partners capital account data to deceased partners capital account. This distribution between the remaining partners, Amir and Salman, will be done in the gain ratio. Again, which case of gain ratio is applicable here? Case 2. As per case 2, new profit sharing ratio between the remaining partners itself is the gain ratio. So what is the remaining partners new profit sharing ratio? 2:1. So that itself is the gain ratio. So in 2:1 ratio we are going to divide it between Amir and Salman. The next one, Shahrukh's drawing till the date of death amounted to 50,000. Till the date of death, deceased partner has withdrawn 50,000 from the firm. So it is an item which should be debited to deceased partner's capital account. Then the last information given as immediately on the date of death, 2 lakh is to be paid to Shahrukh's executor and the balance is retained in the firm. So we are going to calculate what is the final balance payable to the executor by preparing deceased partner's capital account. Out of that total amount, 2 lakh will be paid to the executor immediately and the remaining balance is retained in the firm. Nothing but you have to just carry down the balance. Okay. Now let's see the working notes one by one. Coming to the first one, to calculate the deceased partner Shahrukh's share in the individual policies. As we said, here they have not given who has paid the premium. If nothing is given, it is implied that the premium on those insurance policies have been paid by the firm itself by debiting that amount to the profit and loss account. So when the firm has paid it, it becomes the property of the firm. Okay, whatever the maturity value on the policy they get, that becomes the property of the firm. So deceased partner will have share not only in his policy but also in others policies. So we are calculating as Shahrukh's share in his policy. He would get 40,000. I mean the firm would get 40,000 on his policy because the policy has matured into 3 by 6, which comes to 20,000. Then coming to the second one, the sum assured is 30,000, but the surrender value is half of that, which comes to 15,000 into Shahrukh's share 3 by 6. The amount comes to 7,500. The next point, Shahrukh's share in Salman's policy, sum assured in this case is 24,000 into half, which comes to 12,000 as a surrender value into 3 by 6, 6,000. So these are the deceased partner share in the individual policies. So first working note is over. Second working note is with regard to calculation of deceased partner share in the expected profit during the current financial year. The expected profit of the whole firm we need to calculate here, and that is based on the previous year's profit. 12 for 12 months the profit is 60,000. For 3 months, how much? So when you do the cross multiplication, the expected profit of the entire firm for 3 months comes to 15,000. Thereafter we have to calculate what is deceased partner share, 15,000 into 3 by 6, which comes to 7,500. The next calculation working note is with regard to share of goodwill. So here average profit for 3 years total profit divided by 3, which comes to 80,000. Value of goodwill is equal to average profit into number of years of purchase, 1,60,000. Shah Rukh's share of goodwill will be 1,60,000 into 3 by 6, which comes to 80,000. Okay. So these are the working notes. Now coming to the deceased partner's capital account. As I said, it has to start with the opening balance. As per the previous balance sheet, what is the capital of the deceased partner? 3 lakh. So by balance brought down. Then we have to pass the entries as per the points given in the question. First point is with regard to interest on capital. So let's write by interest on capital. How do we calculate? 3 lakh into 6% for 3 months, which comes to 4,500. The next point is given in the question about individual policies. So we have to write the policies of 3 partners. By Shah Rukh's policy, you would get 20,000. By Salman's policy account, 6,000. And by Amir's policy account, 7,500. This is not capital, you have to write it as policy. Okay. Then by profit and loss account, that is deceased partner share in the expected profit, 7,500. Then next one with regard to goodwill adjustment, by Amir's the remaining partner's capital account data to deceased partner's capital account. Here in the previous slide we calculated the total share of deceased partner is 80,000, which will be distributed between the remaining partner in the gain ratio of 2:1. So by Amir's capital account, 80,000 into 2 by 3. By Salman's capital account, 80,000 into 1 by 3. Okay, then one more item given in this question is about the drawings. 2 drawings account, 50,000. Then we are going to close deceased partner's capital account. We get the balance of 3,75,000. So this balance will be transferred to executor's account. So you have to write to Shah Rukh's executor's account final balance. Then in the executor's account, we have to bring down the balance. Here you have written to Shah Rukh's executor's account. In the Shah Rukh's executor's account, you have to write by Shah Rukh's capital account, 3,75,500. It is given in the question that 2 lakh rupees has to be paid to the executor immediately. So we write the entry Shah Rukh's executor's account data to bank account 2 lakh. The remaining balance is retained in the firm. So you have to just carry down the balance, close it, and you will have the final balance as 1,75,500. Against that you have to write to balance, carry down balancing figure. Okay, so this is the solution for the present question. Let's take a few more questions in the upcoming videos. Thank you for watching.